we've known it all along that silver is completely suppressed and undervalued. Even like at 15 to 1 right now, we'd be around, should be around $300. So I still think it's undervalued. And I think a lot of the general public out there, even people who are in finance, they have no clue that the way the silver market operates, how the bullion banks have used paper to suppress the price, especially on COMEX and LBMA.
Everyone thinks about I got to sell at the top, but what if the top is in the 100? What if the top is 200? You have to have a plan
Yeah,
to exit with a
right,
profit. I mean,
right.
what's the point? Now, most of my followers, and I'm in this kind of the same mindset, is, well, if I sell silver, where do I go to? I don't trust the dollar, right? And that's a tough one to answer, but you can go into a hard asset.
Silver remains structurally undervalued despite its recent surge. Price discovery has been dominated by paper markets rather than physical supply, leaving most investors unaware of how distorted the silver market has become. Innecco and David Morgan point out that even a conservative gold-silver ratio of 15 to 1 would imply silver prices near $300, highlighting how far current pricing still lags fundamentals. Years of paper suppression on COMEX and LBMA have capped prices while physical demand quietly tightened. Unlike past cycles, many long-term holders now question where to rotate capital if silver moves into triple digits, as trust in fiat currencies continues to erode. This is why silver is increasingly viewed not just as a trade, but as a monetary hedge alongside gold, which itself is expected to continue repricing higher as confidence in paper assets weakens. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Silver will get to triple digits. I'm not going to say it might. I think it will. And it's going to keep surprising everyone. It's going to keep surprising the Bitcoin crowd who keeps saying the best trade is to sell silver and buy Bitcoin. I think it's the other way around. And in terms of price, yeah, I think we could get into like even above 200 eventually next year. It's not far-fetched. And one of the reasons why is because, as Taylor said, silver has been suppressed, the price for so long, for like 45, 50 years. And you probably all know about this cup and handle formation, which we've broken out of in silver recently. I think it was October. And gold did the same thing like a year and a half or two ago. And look at what happened to gold. The level there was 2070, 2100, and gold exploded higher. And so I think there's a lot of room for silver on the upside as well. So yeah, I'm quite optimistic about the gold price, which basically means the dollar and all other fiat currencies are going down. But the world, the powers that be, they need weaker currencies because the debt load is so huge. Especially in 2026, we're going to see a lot of borrowers, especially the U.S. Treasury, have to roll over all the cheap debt that they issued in 2021 in the during COVID when they really like pushed rates artificially low. So I think that's the only way out they have to allow the metals to debase their currencies. It makes everything, well, it makes the debt easier to carry. We've known it all along that silver is completely suppressed and undervalued. Even like at 15 to 1 right now, we'd be around, should be around $300. So I still think it's undervalued. And I think a lot of the general public out there, even people who are in finance, they have no clue that the way the silver market operates, how the bullion banks have used paper to suppress the price, especially on COMEX and LBMA. And they don't realize that this scheme is unraveling now because the rest of the world, especially BRICS, they don't trust the West anymore, especially the US, because of what happened in 2022 and what's happening now with all the tariffs, all the sanctions. So they're not gonna, if they want silver, they're gonna buy the real thing. And I think the reason silver's gone up is because of that, not because the public is buying silver. The public will come in probably when it's like above 200. So yeah, I think there's still a long way to go, and I don't think there's any FOMO. I think the FOMO is in the bullion banks. They're trying their darndest to cover their shorts, and that's why it looks like there's FOMO, but there isn't. And the big buyers, like central banks in the Middle East, they're just waiting for the paper smashes because they know the game now. And that's the good thing as well, maybe about this AI guy that's come out. He does make up a lot of things, I think, and extrapolate many things, but he does explain well what has happened to silver. But not only him, I think channels like ours have been explaining to people for years now, and people listen to us. And so whenever the bullion banks smash silver of late, it goes back up really quickly because these big central banks, they come in and buy the physical, and they're going to continue to do that. So that's the way I see it. The BRICS and the countries that are close to BRICS, they're looking at 40%, I think, backing for their currency, which is I think is more than enough because during the 19th century, during the heights of the British Empire, it was about a third here in the UK. So yeah, the prospects for gold are good in that sense, in the geopolitical sense. I think, as Secretary of State Marco Rubio said, I think right when he took office, we're not in a unipolar world anymore. We're in a multipolar world. And I don't think the Americans, especially the Trump administration, wants a very strong dollar. He needs the dollar weak. Uh, and I think the US economy is not doing as well as GDP tells you. I think a lot of that GDP growth is coming from these data centers for AI. And next week, we've got non-farm payroll. I think that's going to be a very weak number. And that's going to help gold too, because the Fed will have to put the foot on the pedal and inject a lot of liquidity. And they're going to cut rates aggressively, I think, this year. And that's going to put a rocket up the gold price. Yeah, I think gold looks really good. We doubled. I mean, we've doubled in the last 2 years. Why can't we double in the next 12 to 18 months? I mean, if you look back to pre-1971, we were at $35, and by 1980, we were at almost 900, and then we stayed between 400 and 250. I don't see why it couldn't go to 10,000. The world would still be, it's just a reflection of the world being a more turbulent and chaotic place. But I think nowadays, so few people understand the importance of gold that they'll be able to allow gold to go up that much. So I don't see a problem. Maybe if it goes to 250,000, like in a year's time, then there's a problem. But 10,000 is like, I don't think it's a problem.
Silver's surge is being driven less by hype and more by a slow-burning structural imbalance that has been building for decades. The metal has spent nearly half a century capped by paper markets, leaving its price disconnected from both monetary reality and physical scarcity. Even now, silver remains cheap relative to gold rather than fiat currency. What stands out is how the breakout mirrors earlier long-cycle resets. After years of consolidation, silver cleared a significant resistance zone, opening the door to price discovery. At a historical gold-silver ratio near 15 to 1, silver would trade closer to $300, a level that aligns with past bull market analogs rather than extreme optimism. Physical buying from institutions and sovereign entities continues to absorb supply, while debt pressures, rate cuts, and liquidity injections favor hard assets by necessity. Gold's trajectory reinforces this setup, with scope for another major leg higher as currencies weaken under policy strain. Let's get back to the interview.
Silver will scare you out or wear you out. I mean, there's periods, almost 20 years where after the 1980 peak and then a subsequent high price, really, it went to 50, and the average price in 1980 was $21 per ounce. And then it drifted down to 5, and it stayed around the $5 level for almost 20 years. And, that's a long time to wear you out. I don't think there are too many people thinking about silver for that 2-decade period. But the point I'm making is that it'll scare you out. In other words, it can make these very, very big moves very, very quickly and exceed the expectations of the most ardent bull at times, only to do what it just did on this open, which means we went from, I think, 84 in the access market, and then by the time it got to the New York market, it already dropped like $10 or something. We're still doing this recording as that day's trading has really got several hours to go. So who knows where it's going to close at today.
Yes.
So I'm really not that surprised. Personally, I think silver's kind of gotten ahead of itself. We've had these massive moves up, and it's only natural, really, for any market, silver included, that you will see, a back and forth at some point. And I've warned everybody, once this bull market starts again, that the primary purpose of a bull market is to shake off as many investors as possible all the way up, so that whenever this market peaks, there won't be too many that rode that bull the whole time. And I am fairly certain we have not seen the ultimate peak in silver yet. There are many that are advocating that's the case. And, you should take all of your silver profits and move it into Bitcoin and all kinds of stuff's out there on the web. I don't pay attention to too much of that, but I have to in a way because I get so many questions from, the general public, but primarily my membership. David, is this true? Is this false? Is this real? What's happening? Blah, 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 blah. And there's so much misgist and skewed information out there that's very difficult to keep up with it all. As far as separating the wheat from the chaff, I'll say prided myself, but I've done my level-headed human best to stay steady on the tiller, take the strong course, the even way, and not get too emotional, because as things move like this, the emotions come out. Surprisingly, a lot of my members that are more conservative, meaning, they don't really use leverage, they are in for the long haul, their expectations are realistic. Several of them have gone in and asked me about options tradings and what kind of, spreads would I use. I mean, a lot of them, not a lot, but more than I've ever seen before, are asking, what's a good way to leverage these silver investments. And to me, that was an indicator that we're going to get a pullback, and we're going to get one fairly quickly. Here we are. I mean, gold is, pretty established. The central banks buy gold. They've been doing it rapidly the last couple of years. That trend continues. And it really is the monetary stability, whereas silver as a partially monetary metal is much more volatile, much more emotional. Sort of looking at the Dow Jones versus the NASDAQ. I mean, if you remember in the tech wreck, I think the Dow went down 20, 30%, if I recall, but the NASDAQ went down something like 80%. So that's a good analogy for the gold and silver markets. So I think your core position, especially the older you get, should be gold. As far as silver is concerned, I think you should treat it as more volatile and act appropriately. So let me just outline what I've done for many years, and that is my core position is like 75%, and with 25%, I trade around that, trying to catch, not day trades. I blow myself up doing day trades, but position trading I'm pretty good at. And that is where you take, a breakout at 50 and just hold on to it until it exhausts. In other words, you keep moving your stop up as the market moves in the direction that you thought it would. So that's something you can do. It does enforce the idea of taking a profit. Now, I've got a core position that I'm not going to sell until I think, we've gotten there. And just to add on to that a bit, it's very difficult to measure where do I sell my silver, where do I sell my gold, because I'd say 90% or more of the population, regardless of nationalities, looking at how many yen is it worth, how many Canadian dollars, how many US dollars.
Yeah, right.
And that is the absolute incorrect way to look at it. What you need to do is look at it in how many barrels of oil, how much real estate, how much in the stock market. That's what you want to know. And silver and gold are very underpriced versus the stock market. So let me go on just a minute longer. If you were in the Weimar Republic during a true hyperinflationary blow-off, a hyperinflationary depression, the stock market went up and up and up and up. So people thought, oh, I'm doing good. I don't have my money in the bank, at least I'm in the stock market. And it protected them somewhat. But if you did the gold stock ratio, what you would find was gold and silver were the only thing that kept you above the inflation rate. Stocks did not. So from that, we could say perhaps that we could see a blow off in the stock market going up and up and up, and people feel good because, the dollar is declining or gold and silver are moving quickly and they're okay because the stock market keeps going higher. But relative to gold, that's what we want to look at. Where is it? And that, again, is what you really need to measure. That keeps you grounded. That keeps you in a basis of the real value versus what is the paper price. Not saying that when you cash out, you don't get, fiat in exchange for it. I understand that. But it's what is the ratio? Is my silver overvalued in real estate? If it is, well, maybe I should take a look at selling silver for real estate. Is it overvalued to stocks? If it is, maybe I should consider selling silver or gold for stocks.
Okay.
And that's really, in my mind, the only way to keep grounded and look at it objectively. Otherwise, you're just looking at a number that can be
Exactly.
printed to infinity. I mean, honestly, all fiats can go to infinity. Look at Zimbabwe, you look at the Weimar Republic, you look at what happened. Can't name them all, but in my book, The Silver Manifesto, I think we had 8 of them in like the last 20 years, and that book's like 10 years old. So, I mean, this is not something that's a one-off and once every 100 years. It happens fairly often. But if silver goes to 100 and you start filtering out at 75, and then it gets to 85 and you sell some more, and let's say it gets to 90 and it never gets to 100. Well, you have to have a plan on the way down because you don't want it to go from 50 to 90 and back to 50, and you rode it all the way up. You're fine. You're one of those people that bought it at, near 50 and held it forever. And you watch it go to 50, you watch it go all the way near 100, and it came all the way back to your round trip. And you've paid the pain of holding it for 20 years or 50 years or whatever it is. You don't do that. Everyone thinks about, I got to sell at the top. But what if the top isn't 100? What if the top is, 200? You have to have a plan to exit with a profit. I mean, what's the point? Now, most of my followers, and I'm in this kind of the same mindset is, well, if I sell silver, where do I go to? I don't trust the dollar, right? And that's a tough one to answer, but you can go into a hard asset. You could go into real estate. Yeah, but real estate's overpriced. Okay. You could go into the stock market. Yeah, but stock market's overpriced. So it's difficult, but still, you've got to take a profit. Even if you move it into the bank and keep it in fiat for a while, it's not going to disintegrate in one day unless you have a bank failure and they close the banks and, it's all over. And I don't see that happening, at least not for some much longer period of time. So you got to be reasonable. Your expectations, I think, need to be reasonable, and your exit strategy needs to be reasonable. There's nothing saying that you have to sell everything at the top. And the main thing, again, and it bears repeating, is do not take a ride from 50 to 150 back down to 50. Sell some on the way up, and if it starts to reverse, you've got to continue to lock your profits in. And that, again, is what I've outlined. I'm putting it in the report. I'm going to make it PDFs again so people can, print them out and laminate them, stick them on their bulletin board or tape them to their dashboard or trying to be funny. But, they've got a plan.
Yeah,
And
because
it's a guideline. It's
of course.
Not, David said 75, it's got to be, no, 75 is a guideline. I'm not going until 80 or 70 is good enough for me. Or whatever the case may be.
Silver's behavior at this stage is doing precisely what long bull markets are designed to do: exhaust conviction. Fast vertical moves, sharp reversals, and emotionally charged swings are not signs of failure, but mechanisms that remove impatient capital. Historically, silver has rarely rewarded those looking for smooth trends. Instead, it advances through bursts that feel uncomfortable, followed by pauses that convince many the move is over. What matters now is not the dollar price, but relative value. Measured against equities, real estate, and energy, silver remains far below historical extremes despite its recent surge. That imbalance is what drives continued repricing. The danger is not volatility itself, but riding the entire cycle without a plan, scaling out into strength, protecting profits on the way up, and judging value through ratios rather than headlines is how long-term gains are preserved. Bear markets rarely end when most participants are still anxious and uncertain. They end when confidence is universal and caution disappears. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.